How's it going, guys? I'm Michael Ketring with the Grauman Rosenfeld Group at the agency in Beverly Hills, here with my partner Adam Rosenfeld with a quick update on the market. Wanted to touch briefly about where we see the shift in the market going. In the past, we've had obviously sellers with a high leverage on the market space. Now we're starting to see a little bit of a trend change in the hands of people who aren't necessarily going to be taking out loans. So if you can kind of build on that, where we're seeing the leverage fall into the hands of.
Yeah, absolutely. I think this is obviously an interesting time in our market as we're moving more closer to an actual recession. And as that happens, what transpires from here is kind of anyone's guess. I think a lot of people have economic forecasts, but nobody really has a true understanding of where we wind up. All we can really do is take our best guess, and sometimes an educated guess is the best one. So personally, what I'm seeing now is not necessarily decreases in prices, but decreases in volume. I'm seeing a lot of that frenzy that we had for a period of time with 10, 20, 30 offers kind of dying down. And as you and I discussed off camera, a lot of that stems from just this notion that interest rates rise and therefore people's buying power tends to deplete. And when buying power depletes, there's less buyers in the market. But as long as there's the same amount of sellers in the market, meaning still a lack of inventory, it doesn't really have this massive effect on the market just yet. But that could soon be turning.
Right, on the prices. And I think with that in mind, with the interest rates going up, it's going to put a bit of pressure on appraisals as well. We're really starting to see an increase, obviously, in the interest rates. And with that in mind, it's going to start to back off the buying power of buyers with loans and really start to put power into the hands of buyers with cash, namely developers that are going to start to see a little bit more inventory come up, which is projected. Not a lot, but just a little bit. And with the slightly more inventory coming up and buyers pulling out of the market space because they're not able to afford the same home, we're going to start to see a little bit more leverage fall into the hands of developers that are going to be able to negotiate a little bit better deals and obviously work, back end type of profits and margins.
Yeah, cash is king right now. I don't know that there's a more concise way to say it. As interest rates rise, so does the rate of hard money. So anyone who's sitting on a stockpile of cash is probably sitting there just like waiting, chomping at the bit to see what opportunities arise. And something else you and I had discussed is what's happening in just the overall world markets right now, right? So if you look at the stock market or the crypto market, people are taking a bath. So when the markets fluctuate like this, or they take major downturns, one of the first things that people have to do is pivot with their actual tangible assets. And they might be forced into situations where they have to sell either their primary homes, secondary homes, or even developers who have to offset some of their losses by letting go of some of their investments.
Right.
Which means it's potentially a really ripe time coming up for cash-heavy developers.
Why now is a good time for developers to start getting into the marketplace? Because a lot of my other developer clients are pulling out or holding and waiting to see because they're just not sure of where the market's going to go.
Sure. So there's a lot of uncertainty in that market, right? So there's a lot of developers who are just kind of sitting back waiting to see what happens, what opportunities are going to arise. And typically that works really well for a lot of people when things are timed right. But it doesn't mean that you always have to kind of be a wallflower and wait for those opportunities, because even in markets like this, or even in more stable, healthy markets, good opportunities will arise.
Right.
And you just have to be active and constantly looking and just pounding pavement. Ideally working with someone like yourself who's out there every day knocking on doors looking for those opportunities, to be able to hand deliver those opportunities to developers to essentially be their liaison to help them make the profit margins and the money that they're trying to make.
Well, what we've seen when a lot of people were holding out because of the pandemic, people made millions of dollars by purchasing in a time where nobody knew what the heck was going to happen. Mm-hmm. Those were the times that people realized that this is now the opportunity to get in, and they obviously reaped a hell of a reward on the back end. Now we're starting to see the bit of the same uncertainty. Now I think is a great time for developers to start getting into this space.
Yeah, well spoken and well said. It's going to be interesting to see what happens with the price point in general. There's been a lot of speculation about some kind of a correction, whether that's a 5%, a 10%, a 20% correction. I don't know. I don't think anybody truly does. And I don't know that that's going to happen at all. I think if I'm forecasting, what I really think is more than likely to happen is more of a stabilization in the marketplace. So, as a lot of the demand to buy kind of falls away, as long as that inventory doesn't necessarily shoot up, which I'm sure there will be some kind of correction there, the reality is it's probably a healthy thing for the market. So the trajectory that we've been on for the last really 2 years, especially the last kind of 4 months coming into 2022, has been just skyrocketing, right, to the moon. I think it's really healthy for any market at a certain point to just stabilize, just to be in a more even, flat market where it's equal opportunity for buyers and sellers instead of being so seller heavy. So it'll be interesting to see that fulcrum kind of swing back more toward the buyer side. And I think that's where we come back to this notion of developers being ready to go and having all their eggs in a row or ducks in a row so that when the time comes, they can pounce and then pick up those opportunities.
Right. On the other hand, you have the argument that would say, well, NAR, Freddie Mac, or Fannie Mae are starting to say that prices are still projected to be on the rise because in the past, where we've seen interest rate hikes of north of 1%, they've actually gone up a few points.
Right. Interestingly, historically, these interest rates are still relatively low.
Very low.
Like interest rates in the past have been as high as 10, 12, 18%. And we're going years back and we never thought we'd see those rates again. But the truth is there's no way to know where things go from here. And I would assume that by the end of the year, we could be at a 7% interest rate, which is like meteoric for the current market that we've been in for the last few years. But as long as the interest rate stays below the rate of inflation, it's still essentially kind of free money, just depending on how you look at it. And once inflation curbs, I don't think there's any doubt in anybody's minds that those rates are going to come back down. I don't know that we're going to see the 2.25% rates that we saw from a few years ago.
Right.
But even if they stabilize in that 3 to 4% range, I think that's really good for the market in the long term.
And to the point, when the interest rates get that high to the point where the market determines that it's just too high for buyers to participate, then do you foresee it really being a good space for developers to really jump in full force?
It depends. It depends on a couple factors, and I think it's more than just what happens in the actual real estate market. I think a bigger component of that is what happens in the supply chain, right? So right now it's still really difficult to get goods into the country, and obviously you're seeing this just like with the price of gasoline, and like the average American's having a hard enough time just living a normal life. So on the developer side, if the cost of building comes down a little bit, if the cost of lumber, the cost of steel, the cost of glass, all these things that are material in the infrastructure of building, if those costs start to come back down to reality, then yes, I think it's an incredible time for developers to jump back in full force.
Thanks again for taking the time to sit down with us. Again, Adam Rosenfeld, Michael Ketring with the Grauman Rosenfeld Group at the agency in Beverly Hills. Contact information is down below. We look forward to hearing from you guys very soon.
Thanks a lot.